Hey traders, welcome back to CWM Capital Trading. So today we are going to review and analyze why price rarely revisits the order blocks that we mark, and why shallow pullbacks like 15 to 25% Fibonacci zones are normally respected. So I've already drawn my change of characters and my OBs. So we are going to analyze gold from 4 hours to 15 minutes, where we're going to execute the trade, and I'll show you how the order block is really respected when we are on a continuation trend, and why 15 to 25% fib level is normally respected. So you're going to dive into the chart. So as I said, I've already drawn my break of structures and change of character, and we're going to start from January 8th 2026. Yes, so let me label this one. This is the 4-hour OB. Hope it's visible. So this is the first order block that was not respected. Then we have the second order block over here that was not respected, another OB that was not respected. So if you're normally the kind of trader who is fixated on price must come to my OB so that I can enter, you're going to miss out on good trades and good moves. So I'm here to show you why price rarely visits these order blocks. So as you can see here, we had our change of character. This is the most recent low that caused this change of character. So what I normally do, I normally take my fib level from here to here, and as you can see, price started rejecting and started stalling around this zone. So before you enter the trade, so I'm going to mark here so that it can be easier to understand. So we drop down to the 15 minutes time frame. It was in January 2026. So I'm just going to move like that. So as you can see, price was stalling around 15 to 25. Most important thing is you have to get the change of character and the last break of structure. That was the last break of structure, and then we had a change of character around here. So what normally happens if we are on a continuation market or a continuation trend, when you see the change of character on the 15 to 25% fib level, we enter. Once the candle closes, we enter. We do not wait for the price to come back at the fair value gap or the order block of on the 15 minutes time frame to retrace. So if you wait for that, you're going to miss out on the trade. So what normally happens, once the candle has closed, sorry about that. So once the candle has closed, the 15-minute candle, and we have seen that the change of character has been created, we enter immediately. So we enter immediately. Our stop loss should be below the 25% because we don't know what can happen. We normally trade with probabilities. We do not predict what will happen on the market. So once this candle has closed, we enter immediately. So that's a first example. And as you can see, we normally target 1:3 or 1:5 until we see another change of character showing us that the market is about to create a pullback. So as you can see around here, if you entered immediately after this candle, you can see how we have a very big displacement. We have a very big displacement around there. So if you entered here and you're targeting 1:3, you can see the market moved drastically, but you also have to be very patient because this is not a one-day trade. So we can see it played out from, this was on January, that was Monday 19th to 21st. So you have to be patient when you are in profit. So that's a fast trade. So I'm just going to delete that so that we can have a clean chart. That's a first example, and you can see that price respected the 15 to 25% fib level. So I'm going to show you another example. So if you're the kind of trader who is fixated about price must come to my fib, price must come to my OB, and you can see these OBs are on the higher time frame, which is 4-hour time frame. This is a first example. So the second example, we can see here that we had this break of structure. You take your fib level from this low to this high, and again you'll see that price is stalling around 15 to 25% fib. So you have to drop down to the lower time frame. Let me mark so that we can see what is happening on the 15-minute time frame. So when you drop to the 15-minute time frame, there are two things that must happen. Okay, first thing is price is stalling around 15-25%, and we can see weak rejection around that area. So that's a first sign. The second sign is we have to see a change of character telling us that now we are about to move up, and that change of character must happen on the direction of your bias. So if it's an uptrend, the change of character must happen on the uptrend market. So here we can see this is our last change of break of structure, and then we have this change of character over here. And as you can see, as soon as we break that candle that breaks the change of character, we enter. We do not wait for a retest of this order block or an FVG. So this kind of strategy, you have to be aggressive. You have to be an aggressive buyer or a trader. You should not be conservative waiting for the price to retrace at this level. So once we have the candle close, we enter. Our stop should be below 25% level. Okay, so as we can see here, we have again the change of character. Change of character is important, and the price has to stall around this area. As you can see here, the price is just creating very small candles, and it's not closing below these zones. So that those are the two things that you should look. So if let me just show you how much you could have made. Once we have our change of character, we enter immediately. Our stop loss is below 25%. We are targeting 1:3, and that's 1:4. That's a good trade. So that's another example Okay, so we are going to go to the next example. Going to go back to the 4-hour time frame. So those are two examples that have respected 15 to 25 fib level. I'm just going to cancel to delete this so that you can have a clean chart. Okay, so we had another break of structure here. Again, we just take our fib level from the swing low to the swing high before the pullbacks happen. That is where we mark our swing high. So again, we drop, and this is where you're going to see why I'm saying it's important to have these conditions that price must stall around 15 to 25% fib level with weak rejection showing liquidity absorption. Okay, and then we have to have the final break of structure and a change of character confirming that smart money is taking control of this trend continuation. So this one is a different example, and it shows that why you need to have this condition happen before you enter. So I'm just going to mark here and then drop to 15 minutes. Let me just minimize this. Drop to the 15 minutes and show you why it's important to have those conditions followed. You just don't enter because price is stalling at 15 to 25 without price showing us that it has changed the character, it has shifted. So here we are. So you can see price stalled around 15.25 and you can see it was moving upward, but we did not have a change of character from this high. You see this high around here? We did not have a change of character, because for me I was waiting for a change of character to happen from this point, but it didn't. So what happened? Price continued going lower to the 50 fib level. So price came at the 50% level, and as you can see, it created the last break of structure, which is around here, and then created a change of character. From this high, we can see we have a change of character. So you only enter, even if it comes to the 50% equilibrium level, you have to wait for that change of character. But in a continuation market, mostly it normally comes to 15 to 25%. But you have to, I am emphasizing on that so that you don't make a mistake of entering a trade before you have the last break of structure and a change of character. So once we had the change of character over here, the candle that closed, we enter immediately, stop loss below 25%, and then you target 1:3, and you can see the market continued going higher. So that's a third example. You're going to go to another example so that you can fully understand why you shouldn't always wait for price to come to your OB. Otherwise you lose a lot of trades. You're going to miss out on these trades. Okay, so we have another break of structure around here. By now you know, you just take your fib. When you start seeing price retracing, that's when you draw your high. And then as you can see, again another example, the price was stalling around 15 to 25, but we didn't have a change of character at 15 to 25. So price dipped to the 50% equilibrium level, had our change of character, then we moved up. So let me confirm that. So again, we're going to go to our 15 minutes time frame, And then you have to be patient when price is retracing in a continuation market. You have to be patient until we start seeing those two conditions happen. So this is where it happened. First, price was stalling around here, as you can see. You can see here price was stalling around, but we didn't have a change of character. So we marked this one. This was our last break of structure, and then we mark our change of character. So the last break of structure, the high, that's where we are supposed to draw our change of character, because you can see here we have this internal break of structure around here and a change of character. You want to mark your change of character from the highest point where the last break of structure happened. So we draw our change of character. As soon as this candle closes, we are entering the trade. Enter from here, mark your 1:3, and as you can see, that is what happened. As soon as the market closes, we enter. Stop loss below 25%, and we target our 1:3. Beautiful, as you can see. So I'm going to delete this one so that we can have a clean chart. So I'm going to go to our last example. So far, I hope you've understood why price doesn't always come back to the OBs that we've marked. So the last example is an interesting one. So we've already handled this one. So when you see these levels are not respected, 15, 25%, the 50%, and the OT of around here, it means that we are losing momentum, and also the buyers are losing control. And also, what normally happen is, all this while we've been having very shallow pullbacks, but when we came here, the price did not respect 15 minutes, 15 to 25% fib level. That already shows us that the momentum is weakening. And if we come back to this deep retracement, this is a sign of you should be very cautious, because price is more likely to reverse. And you can see when price came to this OB, it reversed because it was a very, very deep pullback. So that's it for today, guys. If you want me to break this down further, the whole thing about deeper pullbacks and shallow pullbacks, you can comment below, and I'll show you why shallow pullbacks are safer and have better entries compared to the deeper pullback. So that's it for today, guys. I hope you now understand why OBs are not always respected. So thank you so much, and do have a good day. Bye bye.